Folks, America is literally on strike. We have airline employees, we have hotel employees, we have port workers, all either striking or threatening to strike. And so in today's video, I want to share with you what's going on, and more importantly, why it's going on and how it's going to impact us. So let's start off with talking about what's going on. Let's start with Reuters. United Airline flight attendants vote to authorize a strike. And this was over 90% of the flight attendants, union members, had voted in this, and 99.9% voted to strike. That's not good news. None of us want our flights delayed. And this is not a commentary at all about whether workers should strike or not. I just want you to know what's going on and what it means to all of us. So let's keep going. Next article is by CNN. More than 10,000 U.S. hotel workers struck during the Labor Day weekend. Now, most of them have come back to work, but it's an important sign, and it's going to build to why I think this is happening. Now, the next one's an article by CNBC that talks about port union voices unanimous support for a strike, escalating U.S. supply chain fears. And this is a really big deal, because ports that are threatening to strike, which are in New York, is the New York, New Jersey port, and it's the International Longshoremen Association. But it moves 43% of all U.S. imports and billions of dollars of trade monthly. And after a second day of impasse, they're saying that they're prepared to hit the streets. And even though they haven't had a strike since 1977, this short video here from the chief negotiator for the International Longshoremen Association tells us this time could be different.
The shippers represented by United States Maritime Alliance might think the ILA won't go on strike. Let me tell them and all of America, the ILA most definitely will hit the streets on October 1st.
Okay, so that's a very strong message from the International Longshoremen Association. And if a strike were to happen, people estimate that a 1-week strike would take 6, 7, 8 weeks to kind of clear out of the system, and a 2-week strike would not clear out of the U.S. system until early 2025. And this is the peak holiday season where many businesses earn a majority or a significant portion of their profits for the entire year. So that would be bad. And before I jump in there, currently I'm in the Northwest, and I just want to share, according to The Guardian, Boeing faces a looming strike by 32,000 workers. I believe they're machinists. Okay, so what's going on and what's driving this? I think to get there, we have to look at last year. And last year, there were 2 very successful strikes, and that was Ford. United Auto Workers had negotiated across the 3 big automakers very good deals, according to the Los Angeles Times. Ford and the UAW, again, this was from last year, they struck a tentative deal to end the auto workers' strike. And in there, it says that the provisions that came out of this strike was over time a 25% increase in hourly wages through there. So that's very successful. And also last year, there was the UPS strike. And according to CNBC, UPS's CEO says that now drivers after the strike will average $170,000 in pay and benefits by the end of that 5-year deal. So that was a very successful strike for the UPS employees. It wasn't just the drivers, it was other people. So unions are starting to see success with this. And why are the rank and file employees so adamant that, they're going to go on strike? They're going to go through that economic pain in order to provide a better foundation for themselves and their families going forward. Now, just like a lot of things, why is this happening? It's happening because of inflation. A lot of reasons, I should say. This is one of the reasons. But if we look at this from the Federal Reserve, this shows the median real household earnings. So this is inflation adjusted. And this goes back all the way to the 1980s. And you can see over time, the workers have done pretty well, all the way up until 2019. Let's zoom in on what's happened since the pandemic. You can see that dip at the end of the graph here. So let's zoom in on that. And you can see that the wages have gone down quite a bit. I mean, it's from the median household income has felt like it's gone from $76,000 to $72,000. That's $4,000 a year. That's a little over $300 a month. At the same time, while inflation is eating away at us. So here's what's happened in inflation in the United States. And this is for FMCG, which is fast-moving consumer goods. These are things, necessities in life, things like groceries, things like toiletries, cleaning supplies, and other low-cost household items that we need, food, beverages, things like that. And you can see since the pandemic, since 2019, the cost of goods are 31% higher. So why is America on strike? America's on strike because our wages haven't kept up. And the cost of living has gone up. You know, we were blessed for 2 decades with relatively low inflation. And since the pandemic, things have gotten out of control. Now, the good news is things are getting back in control, but it's still impacted all of us. If for some reason you have not gotten a wage increase for the last 4 years, your purchasing power is down significantly. Now, I would say probably feels more like 25% instead of closer to a third, the numbers that I'm looking at. But, and I'm not saying from my life, I'm just saying when I look at cost of things. I think if you haven't gotten a wage increase, you're 25% poor, which is significant, it's important. Other people say it's closer to a third. Whatever it is, it's important. And that's why folks are saying enough. I've had it. We need to catch up. And that's why folks are striking. That's why people are going through economic pain and putting their jobs at risk. And importantly, it's not just here in the US. This chart here has a lot of data on it. And it shows different countries and whether they're beating inflation or not. So the consumer price inflation is up above, and you can see it either has a red circle or a green circle. And you can see like France, people are trailing inflation. Inflation's 2.5%, and the wage increase has only been 0.4%. You can see Czech Republic also is red, Japan is red, Switzerland's red. Let's see, Germany, their inflation has been 3.5%. They're getting a 1.4% wage increase. Slovakia, you can see, is really in bad shape, almost 5% inflation. And then we go over to Sweden, and I'm getting to the United States here. Next we go to Sweden, 3.6% inflation, only a 2.1% wage increase. The US is doing better than most of the world, but we're still feeling pain. The predicted wage increases are 2.3% and inflation's 2.7%. Next, you can see Italy's actually ahead. The wages are 2.8% and inflation is expected to be 2.6%. But there's only 2 other countries that are ahead, and that's New Zealand. And New Zealand has had crazy inflation and cost of living adjustments. It's really not showing up here, but that's probably because in the past inflation was high. And then the last country is the United Kingdom, where wage increases have been 4% and inflation has been 3.6%. So that's the data. That's why people are going on strike. It's important that we all make good decisions and do what's best for us, which is why I talk here about whether retiring at 65 is a good idea or a big mistake.